Moody's before coming to air. What would your reaction be, or expectations of the reaction on the market when it opens over in the UK?
Well, if you have a look at futures, they have been trading up, both the US as well as the UK futures in the afternoon. But if you have a look at markets and what they've been following, it has been the currency markets. All the twists and turns in our market, the turning points in our market, driven by the euro against the US dollar. In fact, if we have a look at the euro against the US dollar, really an important technical day today. We saw it bouncing off that 140 mark, so it does look like some strong support there. The panic selling died down, and if I could just overlay that against the Australian market. So if we have a look at the Australian market, and if I just overlay that against the Australian market is in black, and I've got the euro against the US dollar here in blue. You can see that once our market closed, we saw that news about the Moody's review of those institutions in the UK coming out, and you can see it's been a negative one so far. So we have seen a weakening off in the euro, so really just adding to that case of risk aversion. Altogether on the day on our market, it's been pretty good so far, but really this news just adding to the case of risk aversion. We've seen a number of moves by those ratings agencies in the last week. We've seen Fitch come out and downgrade Greece by 3 notches. We've also seen Fitch overnight come out and change its outlook for Belgium from stable to negative, and we've seen S&P downgrade its outlook for Italy. So altogether, those ratings agencies have been very busy this week, but unfortunately it hasn't been a good one for markets.
Says with some strong volumes?
Maybe it's a positive sign if you're an intraday trader or looking to hold your positions for a day or two. But in the whole scheme of things, in terms of technically, we made a new low for this correction. So if we have a look at the 52-week chart for the Australian market, this is what it looks like. And what we had been hoping was for a bounce off the levels that we saw yesterday, which would have meant that we hadn't seen a new low. Of course, the downtrend is defined as lower lows and lower highs. And unfortunately, we have seen a lower low today. So that downtrend very firmly in place. If we have a look at the next support level for the market watching the 50% retracement level from that 2010 to 2011 rise that we're coming up to. So we're going to be watching that mark very closely. We have a look at where that is. That's at 4,575 points or 76 points, and that's going to be the next support level for our market. So it does look like that downtrend is in place, and it means the market's seen a correction of 7.7% now from the highs that we saw in April. So it does look like that correction still in place, and traders are going to be watching for a break of that trend before they become positive on the market.
What did you take out of it? Did you take it as a positive, or did you take it as a negative?
I think Goldman's has been a little bit late to the party. We've seen most investment houses already downgrading their forecast for the Australian market a couple of weeks back. I think Deutsche Bank was the latest one, where we did see that forecast breaking down from 5,500 initially down to 5,100, and today we've seen Goldman Sachs come out to downgrade their forecast from 5,600 down to 5,125. We've also seen a number of downgrades come through from Goldman's in terms of China. We've seen a downgrade from Goldman Sachs in terms of China, but interestingly, they are forecasting higher commodity prices. Oil prices are predicted to hit 130 now. So some of these forecasts are a little bit interesting, given that a lot of the oil demand is driven by China at the moment. So forecasting higher oil prices, but then forecasting lower growth in China as well. So a raft of forecasts coming through from Goldman Sachs, the market absorbing the implications of that. But really, a lot of the investment houses in Australia have already downgraded their outlook for year-end on where the ASX 200 is going to finish.